What's up, guys? Feed you information here. Thank you guys so much for watching. And I have Walmart here. They posted their earnings. We're going to go ahead and cover over it, and then we're going to get into its new valuations as well as its current growth year over year. So let's get into it. So we have Walmart beats by 0.08 on their EPS. They posted 1.41, meaning the expected was 1.33. And we have revenue of 138.79 billion, up 1.8% year over year. Not much, but that's 138.79 billion, so it's a lot of revenue to bring in. And then Walmart tops comparable sales view, ups dividend. So Walmart reports comparable sales rose 4.2% in quarter four to top the consensus mark of 3.3%, meaning it beat by 0.9%. Total revenue was up 3.1% to 140.5 billion on a constant currency basis. Despite international sales falling 3.2% to 32.3 billion. So that means that their US sales clearly were better. As we're going to get into right here, US traffic was up 0.9% year over year, and the retailer's average ticket was up 3.3% during the quarter. Sam's Club, so that's basically like the Costco version of Walmart. Sam's Club comparable sales increased 3.3% during the quarter, and now here's the good numbers right here, the really nice numbers. Walmart's e-commerce sales rose 21% year over year. E-commerce sales were up 43% in the US. So this is Walmart really showing that their e-commerce can grow and that they can compete in that e-commerce market, which is the new that's pretty much the modern day buying and selling. So if you can grow in the e-commerce, then you'll be able to survive in the long haul, as well as the fact that they're still extremely cheap and their physical stores still bring in a lot of revenue. The company's operating income was up 36% to 6.07 billion. Walmart also approved an annual cash dividend for fiscal year 20 of $2.12 per year versus $2.08 per share last fiscal year. So, with that being said, let's go ahead and check out the actual valuations now. I normally do a separate video with this, but I don't know. I feel like I should just add it in for now on when they do post their earnings, just because it'll make the video longer, and I'm sure you guys would prefer that anyways rather than having a separate video. So here we go. They have a price over earnings of trailing, so currently of 58.87, so definitely overvalued right now. But a lot of people that are making this point, once again, aren't paying attention to the fact that their forward PE, which is, the future, is 21.84, meaning that it's going to get closer and closer to actually almost undervalued. It is still overvalued where that is, but 21.84, considering the revenue that they're bringing in and everything, that's not that bad. So price to book ratio, we have 4.17, slightly undervalued because you want it to be below a 5. Then, of course, their price to sales, just because they bring in so much revenue, because price over sales is basically price over revenue, is only a 0.59. So that's basically like 1/10 of where you want it to be at, which is awesome because you want it to be below a 5. So then we have a debt over equity that is overvalued because you want the debt to be at half or less of the equity, but it's 0.63, meaning it's 60% of the equity, but it's not that much. Considering the size of the company, I don't see that as a problem. If that continues to grow, definitely a problem, but Walmart's very large, and once they finally figure out things with Microsoft getting a lot of the automatic cashiers in and basically firing a lot of the staff that they have doing the cashier work, that will help them increase their revenue, I think, or not so much their revenue, but their profit. So this 512 billion that we're about to get to will become more profit, so their price to earnings will get lower and lower, and that's what we want to see, it to become undervalued. But anyways, sorry if that was a bit unclear. Sometimes I stutter too much. But anyways, we have the growth side of things now. The revenue was up 3.4% year over year, and that's 512 billion annually that they're bringing in. A lot of money, but they're just not converting it into price to earnings as much as we'd like to see. So that's an issue that they need to definitely solve. But like I said, their forward PE is lower and lower every time. So if they can continue to do that, then this company will do great. But that was pretty much it, guys. That was Walmart's earnings as well as their new valuations. If you enjoyed this video, throw me a like. I do have 3 more stocks to cover. That is Costco, General Mills, and Adobe. As soon as they post their earnings, I'll do that as well as their new valuations. It should be sometime in March. Thank you guys so much for watching. Feed You Information out.